or any comments you might have. Or on Twitter, just use hashtag MKTDAY. Let's get straight into it. Julia Lee, Monday session, the first session of the new trading week. Did you take any positives out of it? Did you like it?
It was a bit of a rollercoaster ride, both in positive as well as negative territory, but in the end the market down by 0.5% with $5.5 billion being traded. It does look like the Australian market just moving in line with the US futures, which were originally in positive territory but then moved to negative and then is currently in negative territory. One of the things we saw the market focus on was Libya. It does look like Gaddafi's regime may have crumbled there, and we have seen an impact in terms of oil prices, especially Brent crude prices, which have fallen 2.3%. Lower oil prices seen as good news for the global recovery. So we did see US futures initially turning positive as oil futures turned negative, but unfortunately we have seen those US futures reversing. There were a lot of positives on today's market. We did once again see gold reaching a record high over the weekend, so those gold miners doing well. Oceana Gold, one of the best ones there, up by 6%, and gold has been one of the best investments in the last 52 weeks. We've seen gold in New York in US dollar prices up by 50% in the last 52 weeks, and in Australian dollar terms up by 30%. Lots of negatives on the market though. Telstra going ex-dividend, so that was a drag. We saw Billabong continuing the losses from Friday. On Friday we saw it losing 27%. We saw it losing another 7.6%. Also, media stocks being sold off quite aggressively and dragging that discretionary sector down. We did see Fairfax down by 6.1%, Seven West Media down by 4.9%. So altogether, it does look like risk aversion still in play and an expectation around that meeting on Friday at Jackson Hole. Interesting
points. A lot of people, the volatility, unsure of what's, going to come when the market opens. Would you suggest people jump in the selling sort of bandwagon or hold on and not crystallise those losses?
Depends, I guess, how strong your stomach is. And I guess when you have a look at valuations across the market, there are many companies with attractive valuations, but we know that's not really what's driving the market at the moment. There's two key things that the markets are watching. One is the US economy and one is the Eurozone crisis. So keeping an eye on those two things and whether problems have been resolved there. And it's likely that we're going to see more downgrades to the US economy and growth there. In fact, Jackson Hole is going to be very important because if you have a look at the Federal Reserve's targets and forecasts, well, they're much higher than the markets at the moment. If we have a look at for 2011, the Fed forecast is for 2.8% growth. The market consensus is at 1.6%. And then if you have a look at next year, the Fed's still got 3.5% growth, whereas the market consensus is 2.5%. Goldman Sachs was the latest to downgrade on Friday. It downgraded Q3 expectations down to 1%, and then Q4 down to 1.5%. That's from 2% previously. So obviously these investment banks coming out to downgrade the expectations in terms of the economic growth in the US as well as
who do you put more faith in, Julia? Do you put more faith in the investment banks, or do you put more faith in the Fed Reserve when looking at the outlook for the US economy?
Well, I guess when I have a look at the outlook, I tend to look at what the market is doing. And the market really signalling quite strongly here that despite the strong earnings that we're seeing now, what it's seeing is possible downgrade to earnings. And that's really what the market is signalling. Whether or not we get that is really dependent on the global situation, but valuations are looking attractive. But unfortunately, if we do see a slowing down in the US and Europe, we will probably see some of those earnings forecasts coming off.
The likes of BlueScope, looking at the likes of OneSteel and so forth, is there a positive in that? At some point, as a business, you need to be smarter, you need to be more efficient, and these challenges simply force that through, I suppose, an economic Darwinism almost?
We don't have a competitive advantage in this area. If we have a look at the high Australian dollar, it's impacting on the Australian steel industry the same way it's impacting on the timber industry, and that is that Australian products just aren't competitive on the global stage. We have a look at how this steel industry works. About 70% of steel is produced by blast furnaces, and if you have a look at blast furnaces, an extremely high fixed cost, which means that these steel companies want to be pumping out the steel at their maximum capacity to try and lower their per unit cost, what this has meant for a company like BlueScope Steel is that it has exported a lot of that steel. In fact, 60% of its steel from Port Kembla has been exported, but a lot of it into loss-making contracts because of the Australian dollar. So if you break down this result that comes today, it shows a very strange story. That is that revenues came in at $9.1 billion, but we saw a loss of $1.05 billion. And while the revenue is coming through the door, they are seeing a lot of loss-making contracts. So this isn't sustainable long term. So we have seen the number 6 blast furnace being closed there. It is going to mean a loss of jobs, but essentially they can't compete against the Chinese products, which are cheaper. We're seeing that in the timber industry, we're seeing that in the clothing manufacturing industry, and we're still seeing this in the steel industry.
Let's look at a potential positive out of today, Michael McCarthy.
If we have a look at Challenger, they have two divisions. One's a funds management division, where products like their high-yielding fund has been doing quite well, and the other side is their life business, and that's really where the growth is coming from. We have a look at Australian super assets. 60% of them are owned by baby boomers, and they're starting to go into retirement. And as you go into retirement, I guess you're not focused on growth assets, but you're focused on things like annuity. So structurally, this company is in a very good space to continue to see strong growth. In fact, if we have a look at the annuity business, boosted by the volatility that we've been seeing in markets as investors move to some of those lower risk products. So the annuity business up by 56%, and this is forecast to grow by another 25% in the current financial year, and this will continue because more and more baby boomers will be moving into retirement seeking out these annuity products. So great result for Challenger today, up by 4%, and the outlook quite strong.